wonderful people. I'm Erica Parker, Queen of Real Estate, and today I want to talk to you all about something that's a little bit more heavy. I want to talk to you about pre-foreclosures and foreclosures and your options. I know that it's not the most upbeat topic, but it is an essential topic to right now in this pandemic and this economic crisis where a lot of people aren't able to work and aren't able to make their mortgage payments. So starting off, I just want to talk to y'all about, I understand where you're sitting. During this pandemic, lost my job too. I was furloughed for several months, and then I was just laid off. And you know, during that time of being furloughed, I did a lot of soul searching, and you know, I knew I wanted to help people, and I had been doing some real estate investing during that time. And so I decided to go into real estate full time as an agent and an investor and a person that can give y'all information. And I just want to say, like, I understand this is a scary time. It's hard. It's hard to face that fact and to be scared about being able to provide for your kids. And I want to help y'all in this situation in case you do come to this crossroads of foreclosure or pre-foreclosure, and understanding your options. So going into those options, one, you could reinstate the loan with your own money. Now, you likely won't be in this situation if you had the money. And just to make the idea, you know, prominent, a lot of people are going to be facing this situation where the last 6 months they've been able to be in forbearance, but month 7 they're expected to make their mortgage payment and they still don't have a job. And banks, because you were in forbearance for the last 6 months, are going to be allowed to foreclose on you if you can't make your mortgage payment. So that is a very real situation that is coming up. And so if you can't pay it off yourself, another option is to ask a family member or a friend for a loan. Now, the only thing I will say about a loan or even a gift is that if someone gives you that money, they're going to start looking at how you're running your life, and they're going to feel like they have a say in how you do that, because they're going to want to get paid back, or they want to make sure that what their investment into you and into you being able to stay in your home is being handled well. And so the only issue with that is that it can cause strife. And for me, I don't like taking loans. I don't like taking money from family because it can cause an issue down the line of strife and them questioning how my decisions might affect, you know, my ability to pay back that loan. And so I don't want that. I don't want that extra strife in my family. And I'm very close with my family, and I don't want that to be another cog in the wheel of us not being able to be close. So your third option is to get a temporary restraining order. Now, for a temporary restraining order, that's really only a solution in a short term. It's only about 30 days. Maybe you can stretch it to 60, but it's not going to hold off foreclosure forever. And it really is only for the situation that you've taken in these other solutions into account, and you're just trying to get more time to make one of these other solutions work. And the other thing about a temporary restraining order is as you get closer to foreclosure, it becomes more expensive. So at the beginning of the month, it may be $1,500, but as you get closer to Friday before the Tuesday auction, it could be $3,000. It could double just because you've waited long enough that they're going to have to put in extra hours on the weekend or something like that. So just be aware that it does go up as you get closer to your foreclosure. Now, fourth is a loan modification. Now, you likely have had a loan modification with the forbearance of the 6 months that you already had. with a loan modification, they can either put it on the back of your loan and just add extra months, extra 6 months to your loan, or they could recast your loan where they take that amount that is due and they spread it over the remainder life of your loan. So they don't add any more time, but you do have a little bit increased monthly payment over the next however long you have on your loan. So there are those options. Now be very aware that a loan modification branch does not necessarily talk to the foreclosure branch. And in doing that, it could be that you may think you're good because you're talking to the loan modification people and everything, and surprise, you get foreclosed upon because they weren't speaking to each other. So you want to make sure that the foreclosure side is aware of the loan modification, and you can get in writing that the foreclosure has been postponed until you have your loan modification figured out. So you need that in writing from the foreclosure people so that you know that it's not going to get foreclosed upon. And so that's fourth. Fifth is filing for bankruptcy. So bankruptcy can affect your credit for about 7 years. It's a little bit less than foreclosure, which is 10, but know that bankruptcy isn't a solution either, because it does allow you to stay in your home for a certain amount of time, but a bank will usually go to the court and have the house thrown out of the bankruptcy suit because it has a lien against it, and the bank needs to reclaim its amount on that loan. So it can be, they do have unlimited resources, so they can get it thrown out of a bankruptcy case or suit, and they can go ahead and foreclose on you. Now, that there's no saying how long that will take, but that is something that they can do, and a bankruptcy can affect your credit for 7 years. So if you get foreclosed upon after that, and you try and find a apartment or a house or anything else, your credit is shot. And so you need to know that that is a consequence, and it's going to be hard to find a place to live if that is the situation. The last three are options of selling. So the first one is to sell retail on the market and to get as much money out of it as you can and get your loan paid back in the meantime. Now, the only thing to say is retail right now, days on market in Houston is 56, an average of 56, and a foreclosure can take as little as 21 days. They don't have to give you a big notice. So those people that are getting foreclosed upon in the next 21 days, you can put it on market for retail, but you need to have another backup option as well. And so for those of you that are looking at this prior to being foreclosed upon, and you're just looking at your options because you know you're behind, you've been in forbearance, and you're not going to be able to make your next payment, this is an option for you because you have taken the time to look into this before you've gotten into that situation. So retail can help, and you can get more of your equity out of it. Now, another option, if you have to sell very quickly, you don't have time to make repairs, or you don't have the money to make repairs, then the last two options are working with an investor. Now, I'm an investor and I'm an agent, so I can help you with both situations. But an investor, what they will likely do is they'll give you a cash offer, and then they'll give you an offer to take your loan over subject to your existing loan, taking your house subject to the existing loan. Now, the cash offer, what they will do is they will likely give you 70 to 80% of your after repair market value. So what that means is if your house at pristine condition and all repaired is $100,000, then they'll offer you $70,000. But if there are repairs that need to be made, say $15,000 worth of repairs, then they're only going to offer you $55,000 so that they can make that money, and because they're going to take the risk of making the repairs and trying to get it back to where it needs to be to sell. So they're going to require some sort of payout for themselves. Usually about a 10% is about what that would be, because the other 20% is closing costs and title and fees on holding the property and different things. So that's why they will offer you that lower amount. Now, the last one is terms. So what they can do is they can reinstate your loan for the amount due, and they may or may not, depending on if you have equity, you may be able to get a little bit more equity out of that besides the reinstatement, but that is a situation by situation. And what that will do is that once they reinstate your loan and they start paying, your name is still on that loan. So your credit starts getting rebuilt, because as soon as they make you current on your bill or on your mortgage, your credit starts building back up. So that is a good thing. The only bad thing about that is if they stop making their payments, then the bank can foreclose and it will affect your credit. Now, what you'll do is you'll want to get a promissory note and a deed of trust that says you can foreclose on the investor if they stop making payments, so that you don't get in that situation where the bank will foreclose upon you. So you foreclose on the investor, you get your house back and you sell it before you get into that situation of having to get foreclosed on by the bank. So those are your options, and an investor will probably offer both of those to you because they can usually make money either way, and both are, options that you might like. If you don't have a lot of equity, you might not be able to do the cash buy option. You may have to go with the subject to. But there are really good things about that, in that, yes, you have to move out of your house, but your credit isn't shot for 10 years. Your credit starts getting built back up. You're likely going to be able to find an apartment or something like that. And, maybe ask the investor if, hey, can you make the deposit for my apartment to move me? There are things you can ask, and they're willing to work with you to try and make it a good situation for both of you. So, just be open and communicative about what your needs are to an investor or to your real estate agent, and I think they're happy to try and make it work for you. They want to see that you don't get foreclosed upon. So because it is such a hard hit to your credit and to what your life will be like afterwards and your ability to get and rent a house or an apartment, they want to see you not in that situation. So anyway, I hope you found this information helpful. I know it's not as upbeat as some of the other subjects I talk about, but like I said, I feel like it is a very important thing to address during this time. And if you have any more questions, if you need help, if you live in Houston or in Texas, I'm happy to help you either find someone or help represent you myself, or give you a cash offer myself. So anyway, give me a call. I can try and also help you with the other 5 situations where you're not selling your house. I can try and give you a little bit of advice on that. But just give me a call. My number is 281-222-8259. Thank you guys, and I'll see you soon.